Okay, fine.
Good morning, ladies and gentlemen, and welcome to the BRAEMAR PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. And before we begin, I would just like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from BRAEMAR PLC. James, good morning, sir.
Good morning, everybody. My name is James Gundy. I'm the CEO of BRAEMAR, and thank you for joining us today for our annual results. On my left-hand side is Grant Foley, our FD, and Tris Simmons, our COO. I'll just start with my introduction first and then pass on to you, then we'll go into the full set of results. I've been in the business, I've been the CEO for the last 3 years, been in the business for some 40 years. Started originally at Clarksons, which is one of our big competitors, there for 10 years. Joined a smaller business, ACM. We grew that business in 2006. We IPO'd that business. I was COO, then CEO. Then 2014, we merged into BRAEMAR, where I ran the shipbroking side first of all, then became the CEO 3 years ago. And since then, we've sort of had a very clear strategy on how we will build that business model and streamline it to basically a shipbroking basis and businesses that complement the shipbroking side. So Grant.
Good morning, everyone. I'm Grant Foley. I'm Group CFO. I joined the business last August. My background is predominantly in financial services, and a lot of that is spent in various broking businesses. I was the Group CFO and COO for CMC Markets, where I was instrumental in leading the IPO, and then I was a FTSE 250 CFO and COO for a period of time after that.
Thanks, Grant. I'm Tris Simmons, the COO. My background is the energy and commodity space, which is slightly different from James' shipbroking. Our careers have crossed a number of times over the years. James and I set up our first business together in 2002 when I was running one of the businesses in GFI Group. Subsequently, in 2018, BRAEMAR acquired my business, Atlantic Brokers, which very much became the cornerstone for the securities business that we now have within BRAEMAR. Thank you.
Thanks, Tris. Okay. Now, let's go for the business update. I think, first of all, I want to say we are very proud of this year's results. We feel it's been a very resilient performance compared with where we were last year and the year before that. I think it's important to understand where we were. And obviously, we've had some distractions, which you may ask some questions at the end, and we'll answer our best to answer that. But the most important thing is we kept in line with our budget and have come through. So, as you can see, we've 152.8 million in revenue compared to 152.9 million last year. 18.1, slightly less than last year, but Grant explained a lot of that going forward. We're still positive in the cash situation. Do you remember some 3 years ago when I came in, the debt situation was huge. We're 8% up on the fixtures and transactions, which means that we're growing our market share. And the forward order book is hitting new highs of 82.6 million compared to where we were in 23, 56.2, so an increase of 47%. And where we've maintained our progressive dividend policy, as you can see, we've increased to 13 pence. Next slide. Now, our business is broken down to 3 sections, so how we break 3 sections. There's a chartering, which is a day-to-day fixing across the globe on what we call spot fixtures. Then we have investment advisory, which is basically our S&P, new building, valuations, offshore, recycling, etc. And then we have the risk advisory business, which is our security business, which is really the freight forward agreements, coal, nat gas, oil, and Tris will explain more about that as we go into the presentation. Thanks. Now, I think I better touch a little bit on this about how we're building our resilience. When we came in 2014, the shipbroking business, as you can see, the revenue numbers there, and the profitability was in 2.4, 2.5 million. We've grown that business I definitely could say I had a vision, and I was keeping my eye on Trish's business at Atlantic to bring that in, to grow that business. We're only basically building security businesses where we take zero risk, it's purely a broker that complements our present shipbroking space. We simplified the business when I came in 2021 as CEO, and you can see from there we've enhanced the business, done some M&A deals so we can prove we can do that. It's complemented the business, and we now have what we believe a perfect platform to build from here. Thank you. Now, obviously, we have a pure investment case policy, growth strategy, which is very clear. I mean, not only would that be M&A, as I mentioned earlier, and we've done that, and we continue to look to do that. We're definitely not an executive team that would go out there and just doing deals. We want to make sure they're complementing our present business. There's obviously always the key thing to hire individual talents, and obviously we have our training graduate schemes. But the fact is, we feel that shipbroking is consolidating and it's self-attracting now for Braemar, because we're now getting into a good place. And on top of that, people now understand what our business model is. Now, the positive market drivers are the fact that shipping is, as you can know, is always in the press and where it is. And presently, the markets are exceptionally strong in some sectors. We're taking advantage of that. Sadly, geopolitical reasons that we see today help shipbroking with rates, and obviously with Red Sea being semi-closed and the Panama being semi-closed, it helps to push those rates up, which we're able to take advantage. Our scale is increasing within the business. We're even opening up offices as we speak in South Korea, which help desks complement each other, and we're able to cover our clients on many sectors, not just a singular sector. And as I said again, our dividend policy is progressive, and we're increased it by 8%, up to 13p. Now I'm going to pass on to Trish to give you a bit more about the growth strategy, where we were.
Thanks, James. So just expanding a little bit on what James was saying earlier, we have a clear growth strategy which we invest in, and there are various means of us growing the business. The first one being through organic expansion, the second one being through acquisitions that we might make, and then the third one being through growing our market share in the products that we're already trading in. I think it's important to talk about some of the investments that we've made over the last couple of years and how they're performing. The most notable ones being the acquisitions of the business in North America, which Southport, the addition of the tanker team in Madrid, and then the expansion in securities into natural gas, which in total that's delivered over 30 new brokers, all with new revenue streams. These were not dealing with customers in geographies that we were already trading with, and new products in the natural gas. For last financial year, that brought in excess of $30 million worth of additional revenue. And certainly for all of those teams that have joined Braemar, I think being part of the larger network and group that Braemar is versus where they were before, they've seen their revenues increase substantially. We're always looking for new areas to expand into, but we do so in a measured manner. As James said, we're not going to do deals just for the sake of doing deals and adding brokers. It's really important that when we make these investments, that we can see something that's going to be directly accretive to our bottom line, and also enhance our offering for our customers. Next slide, please. So some of you may be familiar with this slide, but generally we use it to show the opportunities that still exist within our business. If you have a clear circle here, we see that as a big opportunity that we would look to examine further, and obviously look to fill that space at some time or another. And actual execution of these opportunities We had a very small footprint in the Americas prior to the acquisition of Southport. It was a very tactical acquisition for us in that we had to increase that foothold in the Americas, and working with the management team at Southport now, very much looking to expand our reach into the other products that we trade within BRAEMAR in the Americas, which is obviously a completely new set of customers. Likewise, I talked a little bit earlier about the acquisition that we made in Madrid. It was very much a space that we couldn't get into. It's quite hard to trade with the Spanish refiners. We bought an existing team that have over 30 years experience there. Again, a very tanker-focused team, but their customers are trading a number of different products, which, for example, LNG, we have an experienced LNG team here in BRAEMAR, which certainly that order flow is starting to happen and interest being shown in that product now. And likewise, we hope to see that happen with some of the other products that we trade within BRAEMAR. We talk a lot about securities. Obviously, we've made some investments in that over a number of years. The first one we talked about earlier, James and I, with GFI in 2001, was the catalyst, and then to where we are now with the acquisition of the natural gas desk. We see the regulated space becoming tighter moving forward, and very much the standards that are expected of us within our regulated business being brought up to the same kind of level as the large interdealer brokers. To that extent, we want to future-proof ourselves, and due to the current misalignment that still has existed post-Brexit on the different regulatory environments for the UK and Europe, we very much want to extend our licenses, which will enable us to trade more products in the future with the clients that we already have, who to some extent are already trading those products with other brokers. So it's a natural step for us to expand our reach from the products that we're trading now based on the customer base that we already have. Likewise, same situation in Singapore, expanding our remits with the Singapore authorities. Just another little note there is we opened an office in Korea recently in the last couple of weeks. That's very much driven by demand from our brokers on new build and S&P and corporate finance. To have that geographic presence is something which, again, is going to be another footplate for us to grow into other areas in APAC. Just move to the next one, please. So key sort of stats here on our people. I think it's really important to point out that we're not just investing in brokers. We see a lot of consolidation in the shipbroking space. I don't think shipbrokers can operate in the same way that they did 10 years ago. There's a lot more customer-driven policy and procedures for us to deliver. And we have a lot more alignment towards the regulated business from the unregulated business. To that extent, we're increasing our headcount of the support services to the brokers so that we can give them a fully compliant framework to work in as we expand the business. I think also something that's quite important is that people are our business, and we want to ensure that our team are going to be long-serving colleagues. Our current employees own over 20% of the issued share capital in the business, with most maintaining and building their equity stake the longer they are here at BRAEMAR. I think it's also very important to James, Grant and I that we facilitate clear paths of succession. We've been doing that over the last couple of years. I think there's a little number there of 6 that we've had 6 new department heads appointed in the last 24 months, which obviously is showing the business that we want these people to step up and we have a clear line of succession. Thank you.
Thanks, Tris. I'll just talk now about our financial performance. So firstly, starting with the income statement, revenue at £152.8 million was in line with the prior year, and we saw strong performances from the recent acquisitions and the securities business, which offset weaker dry cargo revenues, which were driven by lower rates during the year, as well as lower activity in our investment advisory segment. Operating expenses were up slightly on the prior year, with lower staff costs being offset by a foreign exchange swing, which I'll talk about in a moment. Underlying operating profit before acquisition-related expenditure was £18.1 million, which is in line with market expectations. The acquisition-related costs were in relation to the acquisition of the Madrid tanker desk. Reported underlying profit was £16.5 million, 18% lower than the prior year due to the increased operating costs and acquisition-related expenditure. Statutory profit before tax at £7.5 million was £2 million lower than the previous year due to the lower operating profit being slightly offset by lower specific charges. Underlying earnings per share was 36.22 pence, 21% lower than the previous year, and total dividends for the year are 13p, an increase of 8% and in line with our progressive dividend policy. If we look at the revenue mix, the group has delivered a balanced and diversified set of revenues by segment and region. If we start on the left, we can see that tankers performed strongly, driven by the acquisitions that were made at the end of 2022, offsetting weaker dry cargo revenues. Securities continues to grow and is now an increasing percentage of overall group revenues, representing 15% for this financial year. On the right, if we look at the split by region, the contribution from the USA has grown significantly due to the acquisition of Southport Maritime, whilst APAC has fallen due to lower dry cargo revenues, whilst the UK has remained steady at 53%. So despite mixed market conditions, we can see the increasing resilience that's coming through across the business, and we've sustained revenues. So if we look at this waterfall here, we can see, if we start with chartering, overall revenues grew by £5 million to 104 million, with tankers, specialised and offshore all growing and offsetting lower dry cargo revenues, which, as I said, was driven by rates. In investment advisory, fewer sale and purchase transactions and corporate finance activity reduced revenues in that segment by £11 million to £26 million. But as we all know, revenues in this particular segment can be more lumpy, as there are fewer transactions coming through in some years compared to others. But having said that, sale and purchase starts this current financial year with a very strong forward order book at $41.5 million, which is $24 million higher than it was a year earlier. This decrease in investment advisory was partially offset by a growing securities business, which increased by 36% to £23 million. If we look at the chartering revenues in a bit more detail, last year's FY23 revenues were £99 million. In this financial year, we grew the total number of fixtures or transactions by 8%. So we grew our market share, and that was really driven by the acquisitions that were made, and that increased our revenues in this segment by £11 million. However, whilst we're growing our market share, we cannot control the market rates, and those rates reduced revenues by £6 million. And within this, it was really dry cargo. Dry cargo rates dropped to around 35% from where they were a year earlier, which had a 12 million decrease in revenues from a rates perspective, which was then offset by some more positive movements in offshore and specialised tankers. Just looking at operating costs, they were 1% higher than the previous year, at £134 million. Overall staff costs were £2.8 million lower, with lower bonuses, partially offset by increased headcount costs as we continue to invest in the business. That increased headcount drove a higher travel and entertainment cost, whilst IT and property costs increased due to the ongoing investment and increased size of the group. In addition, there was a positive foreign exchange swing of £1.5 million in the FY23 numbers, and this year we had a £1.1 million loss. So that drove a £2.6 million swing to get to the closing operating expenses. If we move on to liquidity, the group maintained a positive net cash balance at the year end. At £1 million, this is lower than the £6.9 million a year earlier due to a number of movements, including the investigation cost and other items, which were £3 million, payment of some tax on account for £1.5 million, and we paid some bonuses before the year end, which was a further £2 million. In addition to the revolving credit facility that we have, 30 million pounds, we also have a 10 million pound accordion, and we continue to have significant headroom against our covenant requirements. So finally, on KPIs, as I said, revenue is unchanged from the prior year, although the mix is very different, which really does show the increasing resilience within the business. Revenue per head, and this is the total heads in the business, not just revenue earners, remains very strong at £373,000, 6% lower than the previous year, reflecting that investment in headcount. Underlying profit margin remains strong at 12%, although slightly down on the prior year. However, if you adjust for that foreign exchange swing that I talked about, it's 12% for both years. The forward order book has grown significantly at $82.6 million, 47% higher than a year earlier. And that's really driven by growth in sale and purchase and new build orders, which we've got coming through in future years. As I mentioned, net cash remains positive, and we would expect to see our net cash position improve going forward. Finally, total dividends at 13 pence are an increase of 8% and in line with our progressive dividend policy. Thank you.
Thanks, Grant. Okay, market outlook. Now, we tried to make it simplified on the graph, but to show you how we're able to take some advantages here and give you a bit of an understanding of where the shipping market is going forward. As you can see, the global fleet there, that on the first side, the left-hand side, is basically increasing. Obviously, with a larger fleet, it allows us to do more deals than we were doing 10, 15 years ago. And because we're in all those various sectors across, and we have many offices across the globe, we're able to increase those numbers as well. Bear in mind, when we were at ACM was very much a tanker brokered office, and we were basically singled out in one market. And the attraction to coming to BRAEMAR was there in many markets in the shipbroking field, and we've built on that. So we've taken advantage of that. Yeah, as you can see on the fleet over age 15, normally you would say fleet ships sort of end their sea sail life by 15 to 20 years. You can see the fleet is aging. If the fleet aging and coming out of the market, that potentially moves the things to be short on ships in a market, and thus the rates will even increase, thus helping us as far as our revenue is concerned. And you can see from the new building order book, you can see where it was in 2008 before the financial crisis. It came right down, it's leveled out again, and starting to increase to help restore the fleet from these overage vessels. But there seems to be a fight in the yards over what sector, because at the moment we have most sectors in strong situation. We have a strong new building team, which is taking advantage of that. As once again, that could be in our offices in Beijing, Shanghai, now in Seoul and in Singapore. But we're always on top of the Asian markets, which is where predominantly the new building market is. Thank you, Grant. Now, we tried to give you an indication here with the BRAEMAR index. It's basically, we're taking all the sectors, including the containers, the tankers, the dry cargo. And you can see, as it was last year, you can see the numbers was higher. Obviously, our revenue was higher then, on the basis of the fact that we're covering those sectors. But even though the rates were higher then across the globe, we've maintained our number because we've diversified our business. So we're able to make our business more immune. On the right-hand side, you can see from tankers and dry cargo. But what's interesting, both on our dry cargo futures desk and our tanker futures desk, we're showing positive optimism on the forward markets, which gives us a feeling of the fact that we're in a very good, strong cycle. Thank you. Now, the summary here is that this is a very robust performance. We're obviously pleased and, well, very pleased the fact that we came out with a set of results as we did. We kept in line with our numbers, especially after 4 months of investigation, which was very distracting for the management team, plus, unnerving for the brokers on the floor. Our fixture number volume increased by 8%. We can't control the freight rates. And as Grant explained earlier, dry cargo came off hugely, but we still maintained our fixture basis up by 8%. As far as the acquisitions performed, Tris mentioned earlier how those new businesses of Madrid and the States and the nat gas have embedded well, and I can safely say they've enhanced their own figures from where they were when they were on their own. So by coming into the bigger group, the information flow they can give to their clients has helped them create more revenue. Obviously, the cash position, as Grant mentioned as well, that's obviously maintained positive. And dividend, obviously, again, progressive dividend policy in the business, we're up 8%. So the outlook for the business is still very, we believe, my gut feeling tells me the next 5 years is looking very positive, and there's many reasons for that. Geopolitical reasons in the world we are, sadly for that, but it's positive for the business because we see rerouting of ships coming from whether around the Red Sea being closed, or Panama having its issues, and for various reasons. 26 so far this year, we're in line with the expectations, so we feel positive about that. And it's just wanted to outline the fact that the business feels strong for many reasons of the shipping business, and it's with the evolving fuel usage, whether that be from LNG to ammonia to methanol. We're obviously guiding our clients hugely on that as well, which is obviously making BRAEMAR a key factor for our advice. And as we said earlier as well, the business is a great platform now for growth. We've only just started our vision of how we can build this business, and that's what we're trying to get across today to everyone. So thank you.
James, Grant, Tris, if I may just jump back in there, and thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the company takes a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Guys, as you can see there in the Q&A tab, we have received a number of questions throughout your presentation this morning. And thank you to all of those on the call for taking the time to submit their questions. But if I may, guys, just ask you to open up that Q&A tab, read out those questions and give your responses where it's appropriate to do so. And if I pick up from you at the end, that would be great.
Sure. Thank you. Yeah, so I'll read the question. So one of the questions, with global seaborne trade growing and the total fleet size remaining stable, how do you plan to capitalise on these trends to drive growth? And are there any specific regions that you're targeting for expansion? I think probably really covered, Tris, was by that slide there, wasn't it, with our...
Yeah, I mean, hopefully you can see that we're proactive in identifying the geographies and the areas that we can do better in, and where the real opportunities are. And I'd say without being specific, I mean, global trade is shifting around a little bit now. James has talked about some of the trade routes changing, and with that, obviously, that can provide opportunities for us, not just in the short term insofar as where the rates are, but also, let's say, where our clients choose to be based, and perhaps where the business is the shipping routes are actually moving to, etc. So we are proactive in choosing those geographies, etc.
Yes, exactly. And I think going back some 20 odd years ago, there used to be a lot of co-broking involved. So you'd speak to a co-broker in Singapore to then talk to clients in Asia. Obviously, that market's evolved now, so the commission rate is across the globe. And for that is the reason why we have to be in so many different sectors. And obviously, with having all the information coming to one office and one space, the fact that we're able to guide our clients. And please bear in mind the fact that the business is definitely evolving towards not necessarily regulated, but the fact is we're very close to that. So our compliance, as just mentioned earlier, compliance and KYC is all in place. But just to emphasize the fact that we are a broker that can basically look after the client all the way through a transaction, whether that is raising finance to build the ship, whether that is then to put the ship on for a long-term 5-10 year deal. And we're also able to offset the risk with our futures department. So we're basically a one-stop shop.
Thank you. If your fixture up to 8%, why was your revenue flat? I think we've addressed that really. It was really driven by that weakness that we saw in dry cargo, and really does drive the diversification and resilience that we're building within the business. The acquisitions of Southport Maritime and the Madrid Tanker Desk performed well. How competitive was that process, and how do we plan to balance growth through acquisitions versus organic?
Yeah, I mean, I can start on that one in that, we don't do deals just for the sake of doing deals. We have a formula that we work to, and we like to see, being a PLC, we like to see the same kind of transparency in any businesses that we may look to bring into group. I think that we've looked at other businesses in the last 12 months, and perhaps the nature of shipbroking, the ownership structures can be a little bit opaque, and we've decided that we might not proceed with those kind of transactions. But insofar as we talked about all of these businesses that we bring into group, we want them to be immediately accretive to the bottom line, and we do look for a fairly quick payback on the investment that we may have made. Which, again, something which we talk about the cash position. Everything that we've done in the last 24 months has been self-financed. We haven't raised capital from anybody else.
Thanks, Tris. What considerations, if any, are the board taking into account for the possibility of switching to hybrid, wind or hydrogen-based drives for powering new build ships for the fleet?
I think as far as hydrogen driven vessels, that's still at early stages. I mean, we are very much involved in seeing the early transitions with LNG, with ammonia, or with methanol. We've even seen some wind power ships even adding some sails to try to get that, but they're all still early stages. But the most used so far, the most popular one is the LNG dual fuel. But when I say it's still dual fuel, there's no singular fuels really being built. So still fuel oil is still the common fuel for vessels going forward. But obviously we have seen a lot of transition in the more modern ships, obviously more eco and the less consuming vessels, which is obviously helping as far as that transition.
Thank you. Can you give some colour on the S&P had a good FY23, which subsets are particularly strong? Yeah, if you look at, to the point, overall S&P revenues was down from 22 to 23, but we went into this current financial year with a particularly strong new build order book. So the S&P team have performed very strongly in that new build, which has really driven our forward order book as we go into this current financial year.
Yes, I mean, just to highlight, to understand the fact that the client's focusing more on new buildings as opposed to second-hand deals, then there's obviously going to be a reason why what they have done is perform exceptionally well, because it's important to get a forward order book as well as get a second-hand deal. Thank you.
Can we provide more detail on performance metrics we use to evaluate the success of our acquisitions in the USA and Spain? I'll start on that. Yeah, we really look at how the revenue has performed from a fixture perspective, before they were part of the BRAEMAR group and post the BRAEMAR group, how well integrated they are across the desks and how the information sharing is working across the business. So we can ensure that, having made these acquisitions, as James and Tris already said, they are more than they were as a standalone business, really ensuring that the synergies across the group are realised. And we look at that through a number of measures, but in particular, sort of fixture numbers improving and that communication across the group. Anything else to add on that?
Yeah, I mean, I think the only thing I would add is that sort of pre-bringing them into the group, it's obviously important that we look at them as a standalone business and the profit that they can deliver as they are. When they're brought into group, obviously we hope to optimize that, but we don't build in let's say unrealistic expectations of what those synergies might be based on the acquisition price. We look at it as a standalone business, with a bigger view to what those synergies might do, but that doesn't necessarily influence the acquisition price at that time.
Please can you tell us the date of the dividend payment? This was in the latest announcement. It is in the annual report accounts, which is on the website, but I can also tell you the record date is the 2nd of August and the payment date is the 9th of September. Why are revenues expected to be flattish this year if the outlook is so positive? What are you expecting rates to do? And the 5-year outlook is positive, so what growth in average is possible over that period? I think that as we've seen this year, we've built that resilience and sustained our revenues so that if we see weaker rates, we can offset that. So we've taken a more measured view in our outlook. Given where rates are, we expect dry cargo broadly to stabilise, and we expect tankers to remain positive going forward.
Yeah.
Got a lot of growth opportunities while we decided to increase the dividend by 8% rather than investing in future growth. I think that the balance here is really, we have a progressive dividend policy. We feel very confident about the future, and hence we felt it was right to maintain a progressive dividend policy, increase the dividend slightly, but we still feel confident about the future growth prospects for the business as well and how we can fund those. Thank you.
Perfect. James, Grant, Tris, if I may just jump back in there, and thank you very much indeed for addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses where it's appropriate to do so, of course, and we'll publish all those responses out on the platform. But James, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Yeah, first of all, I want to say thank you for taking time to listen to the BRAEMAR results. I think I want to emphasize to Grant as well, to say thank you for getting the accounts out early, his finance team, compared to where we were the last couple of years. So that's really important for us to get back on track. So that's a key factor for us within the business. I know that for you guys as well, wanting to invest into the business or investors in the business, to make sure that is in line. We are obviously proud of the fact that we're coming in line with our budget, and we've done that, and we are building a business that's basically making us slightly more immune to those market swings, and you can see that from where dry cargo was to where the business still came in on the numbers. I want to thank obviously executives here, and also thank you for your time as well. So thank you so much.
James, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of BRAEMAR PLC, we would like to thank you for attending today's presentation. That now concludes today's session. So good morning to you all.
Thank you.
Thank you.
Thank you.